In this week's episode, we find out what made Chris say this.
2 plus 2 will always equal 4. The math don't lie. Welcome back, folks. We are on episode 26. You are at Lot Talk, powered by Lotpop. I'm Chris Keene, one of your co-hosts, and I'm joined by the gentlemen, the scholars, the esteemed individuals, Mr. Ronaldo Leonard, Mr. John Anderson. Gentlemen, we got a lot to unpack today. But listeners, viewers, hear me close. Today, we're going to share with you and we are going to show you some things that are going on in the industry. So more simplistically put, we're going to show you what's going on. We're going to show you why it's going on, but stay tuned for the entire episode, because then we're going to show you how to duplicate some wins and mitigate some losses. Now, we're going to be utilizing our software to be able to show this, because it's where we get a lot of the data from the hundreds and hundreds and hundreds of calls that we do each and every week. So once again, what's going on? Why is it going on? How to duplicate some of those wins and mitigate those losses. But you're going to have to stay tuned in to this entire episode, beginning to end, and we're going to do everything possible to keep it at that 1 hour mark or less. John Anderson, tell us, back in your day, when it come to understanding the basic fundamentals of your business in your market with your people, what are some of the basic fundamental things back in the bedrock days? What are some y'all know I couldn't help it. What are some of the basic things, John, that we had to do when you sent Barney Rubble out there to take it up? Give us a basic one little or two little things that we had to do.
Okay. Fill the slot and empty the slot. Fill the slot, empty the slot. Fill the slot, empty the slot. Repeat, rinse and repeat, rinse and repeat, rinse and repeat.
How often did you want to do
that? As many times as I could, Ronaldo, in a 30-day period, my friend, and then rinse and repeat the next 30 days.
I got you. Oh, yeah. Did you ever run across a piece of inventory that you might want to hold just in case somebody came in to pick up that particular wagon or horse or whatever it was?
Honestly, Ronaldo, I'm trying to remember if I ever had that, that mindset, or if I ever had anything that rare. Might have been a 1941 Model T or something like that. That you know. Might have been something like that, but I don't, when at my age, my memory goes a little bit, but I'm trying to remember if I ever had that type of mentality. I think I got caught once by our CEO when I was Mr. Rice, when I was on a call with him, when I was in the dealership, and I was on our call. We had a call every Wednesday from 10 to 11. And I remember him getting on me about my Dodge Ram, or back then they were Dodge Rams. They weren't just Rams at that point, my Dodge Ram trucks. And I made the fatal error of this response. Jason, I understand what you're saying, but I can't go get any more of those right now. And yeah.
Okay.
I think I made that mistake. In full transparency, Ronaldo, I think I made that mistake one time and uttered those words. I can't replace them. And
right.
Yeah, I got the standard response. Why in the hell would you want to when they're not selling, dummy?
Yeah. And hey, believe me, I wasn't piling on. I knew that back in your day, question was coming, but I've heard that a couple of times over the last week or so. But I asked a dealer just during the training session, why are you holding on to this? And you sit there and watch it bleed through the cycle, and I'm not going to go into it, but I was just curious, a man of your wisdom, if that was ever a situation where you felt like you needed to hold on a piece of inventory because you didn't feel like you could replace it.
Hey, listen, as we dig into this today, I got a little bit of surprise on a segment of inventory that you would think would be rolling off the shelves. That is not exactly rolling off the shelves right now. So when you talk about holding on to inventory, I've historically seen dealers hold on to this inventory for a little bit longer. And in the past, I understood why. Because it was hard to come by. But I'm seeing them hold on to it. And I'm also seeing a pricing up of it, which again, in the past, quite honestly, you could get away with that, but we'll get into it. But right now, I'm not so sure you can get away with that. So we'll dig into that as we roll on here. So interesting stuff going on out there.
Yeah.
But guys, I mean, I was as guilty. Okay. And John, because you and I both, obviously we didn't know each other back then, but we're from that Chrysler, Jeep, Dodge, Ram era days, or before it was even Ram, Chrysler, Jeep, Dodge days. But I'll never forget when we got the PT Cruiser convertible turbos. Okay. Remember, had that purple one. We had remember Cool Vanilla. Remember Cool Vanilla? Yeah.
Yep.
So I'll never forget. I punched 2 of them to hit some trunk money. And now they're used cars, brand new used cars, but they're used cars now.
Yep.
And I punched these things, and I'll never forget. I sat there and I couldn't figure out why these suckers were getting old. But also in the same token, I went into the system. What was it called back then, John? Dealer Connect. I went into Dealer Connect.
Dealer Connect.
And I don't even know if they still call it Dealer Connect, but I went to Dealer Connect. I'm like, guys, look, there's no more of these in the nation. These should bring premium dollars. And they were like 378 days old when I finally took like a $3 million bloodbath on these things, because it was at the tail end. Because remember when we first got them, they were all sticker plus.
Yep.
And then they got colder than a mother-in-law's kiss in about 32.6 seconds. I mean, it was awful how quick that plummeted.
But you were bound and determined to prove your point, weren't you, Chris?
Oh yeah. Yeah, and I proved my point all right. When the dealer principal, this is what I got. This is what I got. The dealer principal came in town. He came in town because we had stores all over the place. Chris King, come to Emerald's office, please. Dang! I walk in there, and I got my head down on my way in. Then I popped my head back up when I walked in. Hey, good morning, everybody. How we doing? Have a seat. Man, I had to close the door. We started going through I'm talking all the expenses. And the very first one, in the middle, and at the end that he talked about was literally interest. And he just kept hammering me on the interest. Hey, do you realize we wrote a check for this much for our interest? And then he went back to it in the middle. He finished the meeting with that. And every time he was bringing up those PT Cruisers, because he knew exactly what I did on them. And he knew I was completely in the wrong. And in my mind, I wasn't. But then when I saw the math, I was way in the wrong over a Cool Vanilla PT Cruiser convertible turbos. And I took the biggest whipping on those. That was awful. It was awful.
Hey, boss, I just wanted to have a corporate birthday party. I thought I'd use these as the cakes.
Yeah. He's like,
go with that Neapolitan ice cream, the Cool Vanilla PT Cruisers.
Buddy, it was awful. The Cool Vanilla PT Cruisers. Anyways, guys, we got a lot to unpack. And again, listeners, okay, viewers, remember, the reasoning why we do this is for one reason and one reason only: to give back to the automotive community. Maybe you're a client of ours, maybe you're not. it doesn't matter if you're a client of ours at Lotpop, because we want to give back 3 very important things. What's going on? Why is it going on? And how can you, client or not a client of Lotpop, how can you sit there and take something from today's episode to help duplicate wins and mitigate losses? So John, I want you to unpack it a little bit more. Ronaldo, I want you to unpack it a little bit more. So viewers, what you are seeing, listeners, what we're showing. What we're showing is we're starting to see a slight uptick in new car inventory sitting around on dealerships' lots, obviously meaning vehicles are starting to age a little, obviously meaning that all of this inventory that we ordered has come in now. We've had allocation drops, and now we've got this new car inventory starting to rise, and we're not selling what we're stocking in new car. But how is that going to translate into the challenge we're seeing in used car and what we're seeing coming? But once again, that's what's going on. We're going to explain why, but then we're going to give you the how to it. And in the second screenshot here, or second part of this, what you're seeing live on the screen, you're seeing the new cars tick up, and you're seeing a little bit of decline in used car listings out there. So John, why don't you go ahead and lead off here with us, unpack this, and share with the viewers and the listeners why this is an important thing that we're seeing.
There's a lot to unpack there, brother. And you know, I don't look. I don't know all the answers. But I feel like, you know, we have a pretty good baseline of data that we're able to see because of the amount of dealers that we have as partners. And so a lot of these, as you said, Chris, a lot of what we do on this podcast, 95% of what we do on this podcast originates out of what we're seeing Ronaldo, Chris, and I in the day to day as we're working with our team and working with our dealer partners. And so, you know, a little bit of background to this is here recently, we've started to see a lot of buildup in middle bucket inventory across our dealer platform. And here recently, over the last week, we've started to see even our best performing dealers fall a little bit below that 2-week selling rate. So when you start to look at that and you start to see that happening, yeah, what is that, Chris? 49%?
Yes, sir.
Yeah. So, and I think a week ago it was at what, 4 or 5% better than that a week ago. So, you know, this is the first time in a minute, I think, that our best performing dealers have fallen just below that, selling what we're stocking. You know, again, for listeners and viewers, what we track is 2-week selling rates to predict or project forward. So, you know, if you're selling at 49% over the last 2 weeks, and then if we project that forward and you keep the same pace going, then you're going to fall 2% shy in a month of selling what you're stocking. So it's the first time we've seen this happen with our top 10% of our dealers, our best performers. And so, and then watching that trend of, as we've shown on here the last few weeks, of the retail days to turn and the shopper count and the selling rates all dropping at the same rate. So it just is, it's something odd. I had a discussion with one of our PEs early this morning, and the question or the statement was, you know, I don't be careful with that retail days to turn, because it's probably just looking at retail units sold across the country, which I'm sure that's what it is. So, you know, when you combine all these things, you're a couple things we're seeing, Chris and Ronaldo. We're seeing, one, the customers that are in the market, they're still doing business, but they're doing it quickly. They're doing it in that first 30 days. And then as that inventory jumps out of that first 30-day bucket, the leads on that inventory tend to follow it, and it continues to bleed. And so Now you combine that with the fact that now you're starting to see a tip up in new car inventory now for the first time in a minute. And so the fact is you've got tons of inventory out there. And I've said this the last couple of weeks, my concern, and it's just me as a person that has watched these trends for 9 years on this side. My concern is for our dealer partners and dealers in general, is if that tip up in July and August does not come. We typically see a tip up in sales and customer counts in July and August during the summer selling season, when manufacturers are starting to try to push to rid the inventory on your lots to get ready for that next model year inventory. We typically see a trend up in shoppers, and they're buying both new and used inventory. When they're in the market, they're looking at both and they start buying. My concern is because of all the talk about the tariffs, and a lot of those people were pulled forward because of the scare of the tariffs, is that we're not going to see a dramatic tick up in July and August. And I've watched dealers over the last several weeks starting to load up on inventory because they had a good March and April. Actually, the spring selling season went a little bit deeper than it normally does because of the scare of the tariffs. So what you're seeing here is a tip up in new car inventory. And yes, there has been just a little tip down in used, but hover over that. What's the numbers, Chris, on the used car inventory?
So you got 1.5
they
million.
call it 1.5 on Auto Trader, 1.2. And go back to that dip just past July. Where was it at then? Coming out of the last year's summer selling season, right there.
Right in here, when you look at end of August, you start seeing that little dip off there. 1.4.
So over the last year, inventory's actually increased used-wise. So now we got a ton of inventory in the market. And again, this is based off listings on Auto Trader and Cars.com, but you can gather that trend. And so, you're just seeing these trends of inventory growing. There's a concern about the pull-ups, the pull-throughs or pull-aheads because of the tariff talk. And then we're starting to see that bleed through with our dealer partners into that middle bucket. And ultimately, if I don't catch it in that middle bucket, it ends up bouncing past that 61-day plus. And so you got, in my opinion, and we talked about that before we jumped on this podcast, you're starting to see a little bit of the perfect storm starting to form out there. So I'll let you guys take it from there. But, in a nutshell, that's the concern of what's happening out there. Now, is it correctable? Yes, it is. I mean, definitely it's correctable. But I think our point is we got to recognize and get on it sooner rather than later. You just don't want to wait and play. You just don't want to play any waiting games on any of your inventory. I would definitely be my main focus. And you guys you guys may have a different thought, but my main focus, if I was sitting in the chair still today, the number one focus I would have is selling what I'm stocking. And then once I'm doing that, then I can dig in there and find out which vehicles I can tend to let sit a little bit longer. If I feel like you addressed earlier, Ronaldo, if I feel like I got a unit or two that I should be, I should be pulling a little bit more for, and I can relax a little bit longer on, or which ones I need to push the pedal on. But the first thing I got to do is I got to track and sell what I'm stocking. In my opinion, that's job number one right now.
No, John, you're spot on. And with that, Ronaldo, John gave obviously the big what is going on, a lot of, some what could happen if we don't pay attention. But why don't you unpack for the viewers, for the listeners tuning in here to Lot Talk today? Why don't you unpack just a smidget on that, why this is happening? Why are we seeing dealers run into these challenges of this inventory, this bleed through we're talking about, selling outside of the first 30 when those margins really start to compress? Why don't you talk a little bit about the why to that? Why are we seeing dealers, run into this challenge?
Well, and we may have touched on this about I guess 4 or 5 weeks ago, we had a lot of dealers, for some reason, prior to tariffs that were supposed to take place, we saw some dealers go in and raise their prices 10% because they wanted to cash in. They saw that there were going to be a lot of buyers that would come into the market because of and trying to stay ahead of the tariffs and how that was going to affect prices. So they automatically raised their prices 10%. Now, a lot of times that when we come in contact with a dealer who is selling slower in the cycle, they'll bring a vehicle to the market, price it to the ceiling, and sit there and just wait for the buyer to show up. Where we're telling them that when we use the analytical data and they're historically transacting at what, 96, 97, 95, whatever it may be, we encourage them to get to that point a little bit quicker to take advantage of the opportunity that they have to shrinken that sell cycle and not let it bleed through down into the to the next age bucket. And so with this particular dealer, we're looking at it, and the information says that they sell historically around 94%. And they bring it to the market at 97 is where they are currently. In order to stay ahead of what's coming with all of the inventory that's out there. And I think I'd like to get you guys' idea or your opinion on this, but I think that little blip where we're showing a decrease in the number of units that are out there in the market or those listings are people taking some aged inventory, pulling it off, going to let it marinate for, 5, 7, 8 days, and then repost it back online. So I'm kind of leery of that little spike down. I think it's going to go back up because the sales numbers that we've seen doesn't really match up with the fact that that used car inventory is dropping a little bit. But overall, and just kind of wrap it up. I mean, why we're seeing what we're seeing is that people are still in that mindset that I've got to hold out for the most dollars I could possibly get. But rather than working the facts and knowing what that price to market percentage where that vehicle is going to transact in their market, in their store, and with their people, they're going to hold on, let the unit bleed through, only looking at part of the story, not taking into all the expenses and the holding costs and everything else that is going to affect what you are able to generate gross wise out of that unit. And just hold on to it until it sells. Because even in this particular case, I mean, if we look at the average markup, can you move that over? I can't see all of that graph there, but that decrease in what their average markup is between buckets, the difference between 0 to 15 and going to 30, 31 to 45. I mean, that's a drastic drop. But the majority of dealers are selling in that second bucket, 31 to 45. And taking a loss on it, as opposed to bringing it at $3,500 markup, and that's what's causing some of that inventory to back up. The inventory numbers on the used car side to go up, and simultaneously, manufacturers are pushing that used car or that new inventory out there in the market to try to make room for what's coming, with the next model year. So. That's John told you what we're seeing. That's the why from what I see inside of the numbers. So you gonna dig into it, peel a layer of the onion back and dig into it a little bit further.
And, well, we can. I mean, we can peel a little bit deeper into this, but to really expand a little bit more on some of that why and what is going on. Ronaldo, you brought a great point here, and I'm going to give the listeners and viewers some house. When you look at just the snapshot, you're like, oh my gosh, of course the guy's selling cars. He's selling at 94%. Well, that's a cumulative sum of everything. But take a look even closer here. Look at this 0 to 15 day inventory, 16 to 30 day old inventory. He's moving this stuff to market, blended between the two at the 98, 94. On average at 96% in that first 30 is where this guy is rolling. Then you come up here and you take a look. The guy is on track for 100 units in a 4-week period of time on inventory that is 0 to 30 days old. And arguably, you could sit there and look at his inventory that is 16 to 30 days old, an average profit potential of $1,900 a rattle. So by the time he gets to that 16 to 30, ROs are closed out, costs are in there correctly. So this guy's profit potential on that first 30 sitting around that $1,900 and around that 96%. And this is where he's selling the brunt of his inventory. Once again, pacing 100 units in his 0 to 30 inventory. Oh, and by the way, collective sum whole, the dealer's got 117 in stock with 100 sales pace out of the first 30. So he's doing it the right way. Now, $1 million question, if you're a viewer, if you were a listener, and you're going, okay, I'm not selling that much inventory out of my first 30. We're selling a little bit later in the cycle. That's fine and dandy, Chris. How do I recognize? How do I attack this? Well, it's real simple. It doesn't matter what your inventory management tool is. Go into your inventory management tool and run the report and look at two things. Number one thing to look at, go look at how much of your inventory is 0 to 30 days old. For argument's sake, if you have 100 cars in stock and 65 of your 100 cars are in that 0 to 30 bucket, good job. Now go look at your sold report. Once again, out of your inventory management tool, go look at your sold data and look at how much of that inventory we've sold is coming from inventory 0 to 30 days old. Go look inside there. And if you're not at 65% of your better, 65% or better of your inventory sitting in that 0 to 30, you're probably not going to be at 65% or more of your sales coming from that first 30. So takeaway number one, very simplistic. Go into your inventory management tool and look at how much inventory you have in that 0 to 30 that is, hopefully you're at 65% or more. And if you're not, how could you ever sell 65% or more of your inventory in the first 30 where we all know that you're going to make the most gross or mitigate the least amount of loss on a vehicle you might have had to step up and give too much for? How can you ever do that if you don't have the brunt of your inventory sitting in the first 30? This guy here, once again, prime example, doing things in the manner that we're coaching on, in selling in the first 30 and stocking in the first 30. You could very easily see here, this dealer, 88% of his inventory is sitting in the first 30, 75% of his sales are coming from that first 30. So he still has margin and room to be able to sell that first 30. Now, the second part of that Ronaldo and John was talking about is that bleed through, that inventory, those leads that are bleeding through. Now, this is going to be a little bit tougher for you guys, but you need to go in and identify all of your inventory that is 0 to 30 days old. That's step one. Then go inside your CRM and look how much of that inventory has activity. And of that inventory that has activity, go inside and put you together a plan with your BDCs, with your salespeople, with your sales managers of how we're going to attack this throughout the day. Our best advice, any inventory you have in the first 30 should be attacked first and foremost with no doubt. That needs to be the very first thing that you and your team are attacking today. Inventory in the first 30 that has activity. The other side of that coin, taking it back to the bedrock days that John was talking about, the one piece of advice, bring it in, take it out, bring it in, take it out. When you brought it in, but you can't take it out if you don't have activity on it. Now look at that same first 30 and ask yourself, why don't I have activity on this? Is it my merchandising? Is it my photos? Is it my type of photos? Is it my directional marketing? Is it my third-party advertising? Do I have big enough buckets in my third party to be able to support this? And if you're looking at that inventory and it doesn't have activity and your merchandising is wrong, fix it. If your merchandising is right and you're trying to price this stuff above where you're selling, fix it. Those are two big pieces of advice that we could give you if you would just sit there and look at nothing but the first 30. John, I kick it back to you. Add to that.
No, I think you're spot on, both you and Ronaldo. I maybe the only thing I would add to that is one, when Chris is talking about the first thing you should do is jump on those customers that are on your 0 to 30-day inventory. And I'm only pointing this out because I've had dealers call me out on this. That does include your leads that came in overnight. So we're not saying don't, if you get leads in overnight and they're fresh leads, yes, that needs to be the first thing you reach out to. And most of those leads are coming in on your fresh inventory. So that encompasses it all, as far as those first 30. And then, man, understand, having been a dealer, having been a GM and having been a sales manager, having working the desk, being responsible for inventory. I mean, I guys, I truly understand the need to want to see your inventory perform from a gross perspective. I get all that. That's something that, has been around for, I mean, that's the foundation of our industry, right? We want to, when you talk, most dealers talk about the performance of their inventory, they're typically talking about the average gross they're making. So I get it. I really do. So when it comes to, I think one of the things that Chris pointed out that's so important is I've got to know where my inventory is moving at on average. I have to. That has to be a number that I recognize. And if it's not moving where you want it to move at, in other words, if you think your inventory, if I'm pricing my inventory at 105 out of the gate, which is 5% above the average market out there, inventory that's being priced in that, whatever that unit is, if I'm pricing my inventory there and I know that my average selling price to market is 95, then I'm 10% off. And that means that by the very nature of that, I'm going to have to be aware of any inventory that is not getting any activity, as Chris said. Cause how long do I let that, look, I don't think there's ever been a time that we've been on a demo or a new call with a dealer, a prospective dealer partner, that we always ask the question, would you agree, Mr. Dealer, that the best time to make the biggest or the highest return on investment is when? And almost right, 99.9% of dealers say when it's fresh. And so I guess if you really want to drill down on that a little bit more, is what's the definition of fresh? And I think every one of them that would agree it's in that first 30 days. So if I know that, if I'm going to admit that my highest rate of return is in the fresh inventory and I'm pricing 10% above where I know my inventory is moving at what point do I make a decision to pull the trigger on that unit, irregardless of my feelings about it? I think, guys, that, and I've been there. So let me say this. I've been there. I bought vehicles that I swore were going to be good units for our inventory. And they weren't getting activity. And what was I, because listen, to be in this industry, everybody has a little bit or a lot of what? Ego.
Experience,
Ego, right?
Mm-hmm.
Yeah.
So if I'm responsible for bringing inventory into the dealership, and I'm also a sales manager working that inventory, right? Then I'm bound and determined I'm gonna prove that I make a good decision, right? And so sometimes we have that in the back of our minds, and we have a tendency to not think of, okay, my best time to get it good ROI is on that unit if it sells fresh, and now I've got a unit that is not getting activity and it's bleeding through my inventory, and I'm going to bound and determined I'm going to prove a point on it. And I hear this a lot too. Well, when somebody comes in, we'll put them on it. Okay, listen. I always say this to dealers when I'm doing a demo with dealers. The things that we share with you, the strategies that we share with you as a company, they're not I don't think, you guys correct me if I'm wrong, are any of them 100% spot on, 100% that we get 100% return on those strategies?
No, there's too many moving parts. I mean, there's too many variables.
Right. But they are a high percentage return. Right.
Absolutely.
So, I always say this, I was lucky enough to be around the Indianapolis Colts for a while, and I was lucky enough to be there when Peyton Manning was there. And I remember Peyton, when he got drafted, they said, "What are you going to do with your money?" And he said, "I'm going to earn it." And then, he spent ridiculous amounts of time in the film room. I mean, he would be there before anybody got there, and he would leave after everybody left. And they asked him, what are you looking for in all that film? And he wanted to know every position on the field, both defensively and offensively, because he wanted to put his team in the best position so from a micro standpoint, the best position to win every play of the game. And ultimately that leads to winning the game, right? Now, did he win them all? No. But did he win a high percentage of them? Yes. And that's what I relate to what we talk about, right? We're not going to win them all because there are a lot of moving parts, but I'm going to go back to what I just said. Listen, if I'm going to be honest with myself that I know my best opportunity for return is in the first 30 days, then why in the world wouldn't I want to do everything I could to try to sell the highest percentage of my inventory out of that first 30 days? And so I got to be honest with myself. If a vehicle's not getting attention, then I got to find a way to get it attention, or I've got to, or if I'm priced at 105 and I know my inventory on average is moving at 95, then I've got to make a move. Listen, last thing we want our dealers to do, we always say this, last lever we want them to pull is the price change lever. But if I look at just like Chris said, to me, it's real simple. If I review my merchandising on that unit and I've got good descriptions, right, with a good story, with good meta tags in there, I've got good photos that are quality photos that are directionally the right way, and we're showing the high visibility options up front in those photos. So I agree that my merchandising is good, okay, but I don't have any activity. What other options do I have other than getting myself in a position to where I know my inventory is moving at? And why is this so important right now? Why are we harping on this? Because of what we started this call with, or what this podcast with, is that there's some conditions out there. Now, listen, a lot of moving parts, right? So when July and August get here, I could have egg all over my face because it could tip up and everybody rolling again. But it's almost like my faith, people telling me, questioning me about my faith. And I'm like, well, listen, if I'm looking at the two options, I'd rather take the one that is. If I'm looking at two options, I'd rather lean towards the one that says I can have eternal life, right? So yeah. I mean, to me, it's when we talk about getting back to the fundamentals, these are the fundamentals that we're referring to, man. It's blocking and tackling, man. If my inventory, here's the other thing too, guys. If I'm consistently stocking 225 units and I'm consistently selling 130 units, I mean, what is my expected outcome? If I'm stocking 100 more, if I'm stocking 50 more, if I'm stocking 25 more than I'm selling, what is my expected outcome on my inventory? What am I going to do with that excess inventory? It's either going to bleed through on me, or I'm going to take it and give it to another dealer to sell and lose money on it because I'm taking it to the auction. So, to me, I might be the most simple-minded guy out there, and there could be plenty of people watching this and listening to this that could call me up and say, John, I think you're full of shit. I wish they would, because I've been doing this long enough. I'd like to see a different viewpoint if it's one that'll work, because I'll certainly share it with our dealer partners. Or listen, even better yet, we'll bring you on the podcast, man, and absolutely have you share it. Absolutely have you share it. So that's my extra 2 cents. I know I went way around the barn, as these country boys say, but man, I just think it's so important right now. It's so important right now.
It is, John.
Really
it's
is.
extremely important, because we see this little downtick in used cars right now in terms of overall inventory out there. Brett, do me a favor, share the screen again. And I want to show you guys some of the reason why we're seeing it. So the screenshot here, number one, that I'm sharing with everybody, for those that are just listening and can't see the screen, but for those who are viewing, here's what you're seeing. What you're seeing is inventory broken down by price buckets. And what you're also seeing here is this dealer who is high performing, 120 cars in stock. He's got a 55% 2-week sell rate, means he's on track to sell 5% more of his income or of his inventory than what he's stocking. So he's beyond selling what he's stocking, but he's also paying super close attention, because this dealer here, anything north of $35,000, he's got 7, 10, 11% of his entire inventory. Only 11% of his inventory is comprised of those units north of 35 grand, which means 89% of his inventory is under that $35,000 mark. Well, here's the great news. This guy's selling on average at 29 grand. So he's positioned correctly in his inventory. And why you're seeing that downturn in some cases of inventory levels is because some dealers out there are paying close attention to what their store is stocking against what their store is selling. So this guy, dollar-wise, is stocking what he's selling. And the inventory that comes above that, well, guess what? You got to have some of that more expensive inventory, because you're either going to trade for it, or it's those situations to where, hey, in that particular segment or model, based upon whatever my OEM is, I got to stock some of this stuff. Okay, that makes sense. But then you look at the flip side of that coin. You got this old boy here. Now, this is a new dealer. We haven't even had our first launch call with him. But why is he a new dealer with us? Because of this. When you sit there and look at 13, 18, 24, 26, 31, 35% of this guy's inventory versus 11%, 35% of this guy's inventory is north of 35 grand. Oh, and better yet, he's selling his store, his identity currently. Doesn't mean that we can't redefine the identity of the store, but currently where he's selling at 21 grand, but he's got 35% of his inventory north of $35,000. These are reasons why you're seeing some of that downtick, some of that static, because you're seeing dealers out there that either are doing it the right way, stocking what they're selling, or then you got some dealers out there that unfortunately they haven't stopped and taken a look at the identity of their store with those few quick things that you could do inside your inventory management tool is by looking at how much of my inventory is in the first 30. And of the things that I've sold in the last 30 days, 2 weeks, however long you want to look, where am I selling? What
Hey,
am I
Chris.
selling? Go ahead.
Hey, Chris, what if I'm a dealer that I trade for 90% of my inventory, and based on our recent uptick in new car sales, my inventory is slanted towards that? So, for instance, what if this dealer, I don't know the story here. I know the dealer. I don't know the story, but what if this dealer just had, 2 or 3 months of monster, or last couple months of monster new car sales, and we took in a lot of trades that put us repositioned
100%.
our inventory heavy,
Yeah.
right?
Yeah.
So
I'll
what
give you that
what should I
exact.
do? What should I do as a dealer if I'm fighting that kind of thing where I'm getting, because you're not, it's unrealistic to think that I'm not going to trade for everything I can trade for. I got to make deals, right? So if my inventory gets repositioned like this, what's the strategy to go after on that high dollar inventory?
Well, listen, I'll use our big dealer out of the East Coast, Ford Lincoln store. 90+% of their inventory in their used car department is trades. 90+%. Hear me close, guys. 90+% of their inventory is comprised of trades. So here's what they do. They go back to exactly what we just said. They go back and now they're a client of ours at Lotpop, so it's easier for them. They just go in and look at where's the identity of my store. And if the identity of my store is $30,000, all of that $60,000, $70,000, $80,000 stuff that I'm trading for, they're wholesaling it. From day one,
they're not taking a shot to retail at all.
Absolutely not. If they know that that is not their piece of inventory, and they're a Ford store, and if they trade for I don't know, a Nissan Armada, large SUV, and that vehicle is a $65,000 vehicle, they'll run it to the barn. Now, will they take a shot on a Ford pickup truck, on a Chevy pickup truck, on a GMC pickup truck, on a Ram? Absolutely. But equally the same as retail. Wholesale, you will draw the prime dollars out of the wholesale in the first 30, just like you will retail. You will mitigate the least amount of loss in the first 30 in a wholesale transaction, just like you will a retail transaction. So that same large dealership, to your point, John, yes, they will take a shot on the right piece of merchandise. If they sell large pickups, they'll take a shot on it. If they're selling intermediate SUVs right now, and it's outside of where they sell, they'll take a shot on it. But they will turn and burn that thing just as quick wholesale as they do their retail stuff.
Yeah.
So, Ronaldo, take it.
Yeah, I was just going to say that's just a testament to knowing the identity of your store and the value of the information that we provide, because we finished that story, letting you know exactly the information that's most important for that particular dealer. How could you fault them for not running it to the barn if it's proven to be a piece of inventory that they do not sell, and not letting their ego get involved and say, okay, yeah, we'll give it a shot. These rolling ball of butcher knives I got out there on the showroom floor, they'll get somebody cut up on it. It's just, what do we call it? Fugazi, because we're chasing fictitious gross and chasing results that we've never been able to produce. And you know, the point of what we're discussing today is just running that inventory based on the facts of your store and how it performs, recognizing what's going on out there in the market, and being nimble and shifting. I'm not going to shift towards more expensive inventory with all the indicators that are out there in the market right now to give it a shot or take a shot. Everything is telling us that you got to be close to the vest so that you can, when the levee breaks, you're positioned to take advantage of it. But at the end of the day, what do you say? Stock it, move it, bring it in, send it out. Bring it in, send it out.
Each and every time.
Yeah. Oh yeah. And I don't think we're
So
going to get. Yeah.
go ahead.
Well, I was thinking that just looking at some of the economic projections that we see, and everything that's going on with the Fed and interest rates and all that other good stuff, we may see some of those the identity of stores start to increase as people can get into higher dollar vehicles, but we're not there yet. Not yet.
No, we're not quite there yet. And last week when I said OEMs get it together, I mean that's kind of what I was talking about. Is if we're not going to sit there and get that break from the Fed, OEMs, you're going to have to get it together. And with these little incremental drops that we've had in relief, which hasn't been a lot, at one point in time, are the OEMs going to sit there and put a very significant rate rebate combo to help protect their market share for their specific brand? Yeah, at what point in time are they going to do that? Which is, I think, a whole nother episode that I would love to have a conversation, and I would love to get some manufacturers on the line and find out what their thinking is to maybe help with what direction we're going here. But I doubt that would happen, but I would love to try it in efforts, because I wanted to make sure that, number one, we shared what was going on, why it's going on, and give one or two takeaways, which we've done today, for our non-Lotpop clients to be able to walk away from this today. And can I go back into my store, or can I turn this podcast off and go right into my inventory management tool and into my CRM and identify some of those opportunities? I think we've done a very good job of explaining that today. But I also wanted to keep everything compacted within that hour's time. We're sneaking up on that. So let's take it around the horn here. John, 60 seconds. Recap something you want to drive home with these dealers today that are listening in.
Well, I'm probably going to use a little bit longer than 60 seconds because I want to address what I mentioned earlier about a surprising trend I've seen. But just to recap what you were talking about, you and Ronaldo were talking about from a pricing perspective and understanding where you're moving inventory at. I shared it with our performance engineering team last week, an article from Cox Automotive that highlighted the used car market, 2.22 million total unsold used vehicles as of May 1st. The average listing price was $25,547. The average mileage was 71,423. Okay. And then it goes on. Yeah. And that's going to lead into one of the trends I was talking about that I'm seeing. Keep in the back of your mind that average mileage. And then it goes on to say that affordability remains challenging for consumers and used vehicle supply is more constrained at lower price points. Used cars below $15,000 continue to show low availability with only 32 days supply. Keep that in mind. 6 days lower than the same time last year, 10 days below the overall industry average. The top 5 sellers of the month were listed at an average price of $23,926, more than 6% below the average listing price. So keep that in mind. Chris just showed you a couple dealers and how they were positioned at $35,000 and over. But listen to what the average top 5 average selling prices were. You're south of 25 grand, right? So I've been saying for a long time, and listen, when I say I've been saying, I really mean Lotpop's been saying, because I'm not taking any credit for any of this stuff. I just, I'm fortunate enough to be around a bunch of young folks and fortunate enough to be still in the industry where I'm reading data, and the data doesn't lie. That's one thing I can confidently say. The data doesn't lie. And so I've been saying for a long time, Lotpop's been saying, check that inventory sitting 20, 25 grand and over, because that's really that 25 grand range. That doesn't surprise me, this data from Cox Automotive, because that 25 grand range continues to, when you see inventory get above there, I start to see a disparity between what a dealer's stocking and what they're selling. So, again, that kind of backs up some of the things that you were talking about, Chris. And then the piece of data that I wanted to share that I've started to see is, hey, I know some dealers out there, and I was one of them. I had for me, it was 5,900 and under, right? I had the store I was in, the store I was blessed enough to manage was in a town of 12,500 people, and there were 7 auto parts stores. So a lot of do-it-yourself customers in that town. And so fortunately, we had a big grass lot north of our store, right across our drive. And we stocked it with about 5,900 and under do-it-yourself as is vehicles. Right. And when you're looking at the market on those things, typically we look at them in our inventory, we're seeing them priced at 115, 120, 130%, because on a $5,900 vehicle, right? I get it. Right. But it's been a long time, but man, I'm starting to see, and especially those cars have a lot of miles on them. They're 100,000+ cars, right?
Sure.
I'm seeing a lot of disparity in what dealers are stocking and what they're selling in that inventory. And that hasn't happened in a long time. But again, I think dealers, if you're stocking these inexpensive, high mileage cars, man, keep an eye on that stuff, because I just think, think about it for a second. What we're facing right now, there's a lot of uncertainty. Things are costing more money, right? And so the consumer, a consumer that would potentially may typically buy that vehicle because they've got a little bit of extra expendable money that they can throw into that thing and get it right. That expendable money is not there anymore.
It's minimized. Right?
Yeah. Yeah. So that's the one thing I wanted to share that I'm starting to see some of that lesser 12 grand and under inventory. I'm really starting to see it start to slow down. And I haven't seen that in a long time, just from what the Cox Automotive said. There's just not a lot of that inventory out there. So do with that what you want. But again, the data doesn't lie.
No, John, one thing that's never changed, 2 + 2 will always equal 4. The math don't lie. Okay. It just don't lie. That is excellent information there. Ronaldo, go.
Gosh, I guess to kind of wrap it all up is just getting back to the basics. John brought up an example of what the sheriff used to do in order to earn his money. He'd get in the room and he'd review tape. The eye in the sky never lies, to look for tendencies and to increase his odds. Same thing here. We got to get in front of the data and read what it's telling us. People will lie to you 7 days a week, but the data will never lie.
Never lies.
Never lies to you. So just get in, look at the numbers, and then also execute on the basics. Photographs, descriptions, and making sure that you had an example just flash into my head there. But make sure you've got your vehicles advertised for what it is. And if you're gonna, if you're gonna try to sell above the rim right out of the gate, just make sure that unit justifies the money that you're asking for.
Oh yeah,
that's a big way to make sure that we have an opportunity to sell it when it's fresh. But take care of the basics, work the facts.
WTF, baby. We got to work them facts.
Absolutely.
We got to work them facts. So listeners, viewers, there you have it. Okay. You want some more insight. You want some more information, as we've said, and we will continue to always say, if you go to lottalkpodcast.com, you reach out to John, you reach out to Ronaldo, you reach out to myself. We will be more than happy to jump on a call with you and help you unpack some of these things to help improve your business. We'll do that for you at no additional charges at all. All it's going to cost you is to take the time to improve, to let that eye in the sky show you where your factual information is. We are happy to sit down and do that. Again, today, folks, I hope you found impactful what was going on or what is going on, why it's going on. And I hope you wrote it down in a few things that we shared with you on how you guys could go in and duplicate the wins and mitigate the losses. Unpack it some more. Give us a call. John Anderson, Ronaldo Leonard, Chris Keene. give us a call. We're happy to do it. LotTalkPodcast.com. On behalf of my amazing co-hosts, on behalf of our Lotpop family, on behalf of Mr. Brett Branstetter, who makes sure that we keep everything within the rails within reason. My name's Chris Keene, and thank you so much for tuning in to another episode of Lot Talk, powered by Lotpop. You guys be good now.